So first question, really, what has changed over the last couple of months? I hear more from the people who were bullish this stock becoming relatively bearish as the months progress. What's changed in the last couple of months, Gene?
Well, John, before I jump into that, I want to just make it clear that I am positive on this story longer term, and I think that they will reward investors ultimately. To answer your question, what's changed is you can really pinpoint the decline in stock, at least in the last few weeks, to May 5th, when Trump tweeted that there was going to be this 25% increase in tariffs. And I think what specifically that had the impact is that drew some more concern about the China business. So China is the world's largest EV market. It's something that has had relatively few Model 3 deliveries just because they started at the very end of the March quarter. And so the street has been concerned about the underlying demand, but that concern has accelerated in recent weeks, given how this demand will play out for 2019, given some of the tariff concerns and potential boycotts that could follow. So that is really, if you want to pinpoint this, it really has to do with triangulating what the underlying demand is for 2019.
So, Gene, let's draw that distinction then between the demand risk for 2019 and overall your constructive view over the longer term. How so, Gene?
So I think that the demand issue of 2019, this is really a wild card. Effectively, what we're seeing is this unprecedented pent-up demand for Model 3 that has impacted last September, December, and this March quarter. And so those unit numbers were typically, when you're modeling a company, you can take some baseline assumptions and extrapolate that. But given that we had 2 years of pent-up demand, I think it's been difficult, concerning for analysts and investors to try to guess what that demand is for this year. And the reason why that guessing creates some more anxiety for investors is because there is this how much cash that they're burning. Now, one piece that gets missed in all of this recent concern or acceleration of the concern is the company just raised money, called $2.7 billion. That should provide another 2 years of runway. So I think that if you take the perspective that what's demand going to look like in 2 years versus 6 months, I think investors can get increasingly confident that ultimately Tesla will survive to tap into what is one of the biggest growth curves in tech around electrification of cars.
So, Gene, just to highlight that, because I think it's important, you don't see the need to raise more capital this year?
No, definitely not this year. I mean, they'll be at, the simple answer, John, is no. They do not need to raise more capital, assuming that they hit 300,000 vehicles this year and 300,000 next year. That recent money that they raised should take them for a couple of years. And to put that 300,000 in perspective, the company has guided 360 to 400,000. No one believes that. Most analysts right now are right around that 300,000 mark.
So, Gene, I want to get your thoughts on some commentary that's come out quite recently. The idea that we've moved away from a growth story towards potentially a restructuring distressed credit story. What's the pushback against that, Gene?
I think it's a misinformed view. And yes, when you try to capitalize on transformative markets or trying to transform a market, there is inherent risk that can be, I think, incorrectly viewed as distress. To me, distress is something that the company could no longer be around in a year. And in fact, that's not the case here, is that they have 2 years of runway like we talked about, and I think they have the ability to raise more money. And I think what that view points out to is just some of the emotion that get played into this story. And again, I suspect that you will see a pendulum switch in the next year as these analysts and this commentary around distress turns back in Tesla's favor, and they talk about this incredible opportunity ahead of them.
Gene, it's still an incredibly transformative company. It has been over the last couple of years. It has changed this whole industry. But as you know, better than pretty much everyone I ever get to speak to, that going first doesn't mean you'll be the best at it. Could that be the problem here, Gene?
The first is oftentimes not the winner. That's true. I think there is a distinction that's important here is that there is a technology piece that creates an inherent advantage, and there's two aspects around that. One is around just the battery and some of the efficiencies around their battery, which is critical to this growth curve around electrifications, addressing range anxiety. And Tesla has called their battery performance is about 60% better than traditional automotive. And the second is the manufacturing of these even though Tesla has had difficulty manufacturing, it is like manufacturing a computer on wheels. I was recently at the Tesla factory, and that's the part that really stuck out to me. And I think that's a comparative an advantage. And then I guess you could add a third piece around some of the things they're doing around autonomy. And so my perspective is that I think that they actually do have some substance. It's not just a brand. I think they actually do have some substance.
Just for the next couple of weeks, Gene, I think it would be really helpful for myself and a lot of our audience to understand the playbook for this company in the next couple of months. What are you laser focused on? Just in the short term, we've talked about the long term, but in the short term, what are you looking at really carefully?
It's going to be what's going to happen in China and in Europe, because those markets are the ones that they're rolling into, specifically around the Model 3. And we're going to be focused on how, we talk about the consumer perception in China of Tesla products. Is the government going to make it a little bit more difficult for Tesla to sell products? And then the last piece over the next few months is China-related as well, which is how their Gigafactory in Shanghai is progressing for manufacturing Model 3s. I think if they are, in fact, are able to open that up by the end of this year, that should be a measurable positive.